We are back to close out another week in the markets. The TradFi markets are heading for their third straight losing week. Meanwhile, the dollar is on an absolute tear, going to close out a 10-week winning streak, which is absolutely crazy. We'll be discussing that, how we're positioning ourselves for Q4 and beyond, and much more today on Money Never Sleeps. Welcome back, everybody. Before we get going, please do us a favor, hit that like button, subscribe to the channel yet if you have not. Nothing that Kevin or I say is financial advice. We are not financial advisors, so please do your own research before making any buys or sells. Kev, it's a fairly boring day in the markets. We didn't see anything too interesting come out of Japan. They kept their rates negative. We'll see when and if they decide to raise those. But other than that, we're looking pretty boring across the board. The major indexes are all trading flat or slightly up. We're seeing the NASDAQ have a little bit of a run here to close out the day. Meanwhile, the dollar is still looking quite strong. The VIX has pulled back over a point. Crypto is looking like it's trying to, trying to close out the week on a high note. Well, they still got a couple days in the crypto markets for that weekly close. But what is, grabbing your attention today as we close out what is going to be the second to last week of Q3 and begin to head into Q4?
Yeah, I woke up and I saw that majority of the stocks are up this morning, in major indices, and they've seen a good amount of them pull back, and now it looks like they're about break even, maybe trying to get a little bit of profit here. I think that's been really important to keep an eye on, because for me, that shows that's okay. They're taking profit off of any pump that's going up. So if they are selling any rallies, obviously that's a pretty good sign of, okay, people are definitely taking profit here. So I've been keeping an eye on that. We'll see how the weekly close happens here. I think that we're going to see definitely we'll definitely see some movement, but I think that this week is just kind of getting a setup for what we're anticipating next week. So I'm definitely seeing how the weekly closes are here. The dollar is going to be the most important close, I think, of the week in a few hours. Depending on how that closes, you're going to see pretty much where people are positioning themselves, and that's probably going to be a good indicator of where I'm personally going to be putting most of my focus going into the end of Q3 and then heading into Q4.
Yet no real data came out today. We will have quite a bit next week. We'll get some consumer confidence numbers on Tuesday. Wednesday, we'll get durable goods. Thursday, we have initial jobless claims, the final Q2 GDP number. And then Friday is the big one. It is personal income, personal spending, PCE, core PCE. That is going to be a big day, because if the government shuts down, that'll be the last reports we get for a while, because October 1st will be that Sunday. So some stuff to look forward to next week. We're kind of seeing this back and forth, like people deciding if they want to be risk on or not, right? We have Tesla taking a big move down today, almost 4%. On the flip side, NVIDIA was a bit oversold in the shorter time frame, so that's back up like 1.6%. I'm seeing ARM is struggling down to $51, right around the IPO price. This was something that we had called out as, it took that initial just skyrocket up to over $68 a share. We believed that it was, just going to be ripe to get liquidated, and for people who are early holders of that and could get profit. If VCs and early stage investors and people who got into the IPO could take profit, they were absolutely going to do it in this state of the market. Like, people will sell that shit immediately for a quick 10-15% gain, and rightfully so. Why wouldn't they? So I'm very comfortable that we, both of us stayed away from that one. I still think there's potential there, maybe even lower than in the 40s. I initially had said like around 40, but maybe I'm looking for into the 30s now before I would be interested in entering a position there. What else are you seeing? Let's start on the TradFi side, if anything else is kind of getting your attention, and then we can move into crypto, because like I said, not a lot going on. kind of a boring day. And then we're also going to discuss how we're positioned and what we're doing to, prepare ourselves to take advantage of multiple different scenarios that could play out. Because we got to be open to the idea that like we're potentially wrong about some stuff. It's not going to go exactly as we think. But what is getting your attention in the stock market?
Yeah, definitely. So I just want to touch on ARM as well, because that was something that, I've been keeping an eye on over the past few days. Like you said, we did call it perfectly. I'm not bragging here, but we said that there'd be a squeeze, and then after that, there'd be a sell-off, and that's exactly what would happen on this chart. But again, the reason because liquidity, right? We can look at Instacart as well, which IPO'd on Monday. This one was just pure liquidity. This was 100% just milk them for everything they got, and they did a pretty good job. And you can see even on the hourly, we're overbought, and guess what? We're the lowest we've been so far. So that's not necessarily a great sign, but it shows you that IPO season, it's pretty much just an opportunity for liquidity to be pulled from the market. And if anything, that kind of is concerning when we look at some of the major indices, major TradFi stocks and stuff like that. So I just want to go through the S&P real quick. So obviously, this is where we were earlier today. We were up here at the open. Let's see, we opened up at roughly 43.26, and we went all the way down to 43.21 before pushing up here. I think people definitely are taking profit for the most part. Every chance we get to the upside. And the reason that's is a little bit dangerous is because every time someone takes profit, obviously that means that there needs to be a buyer to push the price up. But if there is no buyer in a lot of these major indices and a lot of these stocks, then guess what? You have less liquidity on hand if you're going to start exiting positions. So I think it's kind of scary right now for a lot of people who are extremely exposed in the market that have positions that they might want to be getting out of, because once someone starts selling, everyone's going to start selling, right? There's going to be a point where there's just no buyers. And once we get to a certain level, people are going to try and find liquidity in every corner of this market. And I guarantee you that they will find it, but that just means that there's going to be a lot less for the next person who's going to sell after them. So not telling you guys to do anything, but it's something that I'm keeping an eye on. It's a bit of a death spiral, but we have no confirmation yet. Do want to look at the Dow though, because this is a huge close that we're getting today below that 34,347. This has been massive fucking level of support in TradFi, but we're below it. We're way below it. And we're going to close the weekly below it for, I didn't even check, maybe definitely the first time in some time. Let's see. Yeah, the last time we closed the weekly below it was back in July month, or not even. Actually,
back in August,
June actually.
Below what number?
Below this purple line here. We closed right on it back in August, but if once we closed below it, that was probably right here, June 20th.
Gotcha.
That week there. So it's a big close.
Oh, I was looking at the NASDAQ, not the Dow. My bad.
Gotcha. No worries. Yeah. So obviously this is a really big close. We're breaking out of this channel. And again, I'm not going to say that how important this level is, but you can see here how many times this thing has been tested as support and resistance. It's broke above it. It's been hit below it. We broke above it, and this could have been technically a little bit of a fake out over on the weekly chart. Now we're below it, and the question is whether this market has enough momentum to keep pushing up above it. We can see that we're also finding a lot of resistance here on the weekly on this point here, this point up here. The question is, are we going to eventually at some point retest this? I don't know. I think that there is a lot of issues when we're looking at the TradFi market, and a huge part of that, comes into play is the dollar. We were talking about this before the show. It's the 10th week in a row for green gains on the dollar, and it's no surprise that we're right here tonight when we're closing. This is the 105.57 level. It's been a huge level of resistance here. We got rejected here on the weekly, got rejected here on the weekly, rejected here, and now we're here and we're trying to close above that today. We're down maybe about 0.1% from where we need to be to close above it. And if we close above it, that's hopefully a good sign moving forward that we are in a bit of a bullish market here for the dollar. And it wouldn't be a surprise, again, as we're seeing treasury yields go up. And we're seeing a lot of interest in money markets too. So naturally the dollar would be outperforming, some of these equities and again, Forex, as long as some of these other currencies remain low. And I think Japan doing what they did today is going to hurt them. Again, we're seeing 148 yen to the $1 US. So them not doing anything, once again, is hurting the yen, probably propping up the dollar a good amount today. And yeah, so we need to see that close above it, and it's going to make it a lot easier for bears moving forward. There's a reason why I did break out of this, and we said that this was a bull flag down here that started all the way from the descent in September to the beginning of the year, and now we're finally breaking out of it. The question is, how high can we go? Depends on if we break 105.669 in the next few, today's close or next week's close, because eventually that just means that we're going to test some of those higher levels of resistance, which is 107.19 and 109.169. So red line, green line first, obviously. And, if we break above those, then maybe a double top at 114. But let's not get ahead of ourselves. Let's focus on where we're here. But if this is a big move to the upside, say a through wave, reversal, ABC or something like that, there's a good chance we could break above 109. So we'll keep an eye on that. We'll see how this plays out. But the dollar, I'm still extremely bullish on. It seems like there's a lot of catalysts for the dollar to be strong and remain strong here. And yeah, that's honestly all I'm seeing in TradFi. I do want to put one last chart that I was looking at too. And we can also look at Tesla too if we want to. But Netflix, absolutely eating shit. We were at $379 today. At one point. So we're seeing that people aren't necessarily intrigued in buying this. We filled the one gap. We're going to go down and fill some more gaps as well. We can see that, right here is where that gap was. Probably going to find some support, hopefully, on one of these moving averages, unless there's an absolute collapse. But yeah, we're just filling gaps. A lot of things that we, shot up on one side are starting to get filled out on the other side. You can see Tesla's having a pretty bad day today. Fuck, this week's been absolutely a massacre for Tesla. Look at this. We're down for the whole week, 9.93%. Okay, that's fine. Again, at Tesla, I still remain steadfast on the idea that it's extremely overbought and overvalued. And again, you guys know where my personal targets, where I'm going to be buying in at, is around $64 a share. So when we're seeing stuff like this, we know that consumers are strained. Doesn't matter how your fucking supercomputers, which could have been a buy the news, I don't know, fucking excitement event. We have to consider that the consumer is the most important thing when we see how some of these stocks are doing. It might be wrong for a period of time because obviously they're corporate profits versus expectations and earnings are going to be misleading for the markets. But eventually it comes down to the consumer and how strong they are. And I don't think consumers are strong enough to be dishing out cash for Tesla. So seeing this is starting to fall in line with more the idea that, okay, the consumer is strained. Maybe there isn't as much upside as we once thought. And this AI kind of bubble is bursting right now. I don't think anyone really cares about AI. At least they haven't said so on CNBC or Bloomberg in the recent few episodes that I've watched. So I think that we're kind of in this place where it's like, okay, maybe reality is starting to set into the market.
I think we're not going to know any more about that until we get Q3 earnings for these big tech companies that have relied on throwing out anything about AI to buoy their stock price when earnings maybe don't look as strong as they would like them to. I'm looking at the NASDAQ. That one is down almost 5% this month, and heading for, September. You had called it like late in August, Kev, like survive August. We're going to have a rough month of September. And that old adage is playing out, right? Like the expectation that September isn't good for risk on assets. We're seeing it again. Every week in September has been down across the S&P, NASDAQ, Dow, crypto as well. Like we've had, last week was kind of a break-even week for crypto. But other than that, it's been down consistently since mid-August. Really since another break-even week, early August. It's really been down only since mid-July, and that is that's not too surprising. The question now is everyone's like, okay, we're getting through September, and now we're back into I'm loving the term Uptober of everyone just like, yeah, we're gonna make it all back in October.
Bloodtober.
Okay, guys, we'll
get it right.
See about that. But I think at this point, it's good to revisit as we head into Q4, kind of how we're positioned and what our strategies are. I know that you are still more bearish than I am. I still have positions in the market across stocks, crypto, bonds, all that stuff. Also been, putting cash away into a higher yielding cash account. I have some bonds, but I want to also have cash on hand that is earning me a nice return. So found a cash site that allows me to make about 5.3% on my cash, pays that out monthly. I'm all good with that because, on one hand, if we do see a huge crash at some point in the next year, I'll be able to move that money out fairly quickly and take advantage of it. If we don't see a huge crash, which I think we can't assume anything, we can plan for, but we can't assume it's going to happen. And rates are able to stay elevated because, like we talked about the other day, if we see rate cuts happen sooner than are currently expected, it's because something went south in a hurry and the market is tanking. If we somehow avoid that and the rates still stay in the mid fives all through next year, I'll be totally content with a small proportion of my assets being in cash and earning that amount. So I think that's kind of what I'm focusing on right now, is trying to have that balance of maintaining risk, not selling too much stuff to deal with taxes, but also slowly accumulating more cash so I can continue to DCA into some of these things. Like I still have my Bitcoin DCA going. I added a Chainlink DCA last week. Do I think it's going to go down? Sure. I'm ready to buy it if it does, but I'm also okay DCAing at sub $7 when I do believe that's the type of token that could go to 50 again over the next, couple of years. I don't need to time the bottom perfectly. I'll still grab the bottom if I can. But that's just kind of how I'm viewing things and positioning now, is not quite as aggressive as you are, but we're also kind of in different phases of our life. And I think that's important to talk about too. Like, 37-year-old guy with a wife and kids versus guy in his mid 20s who is has that higher, slightly longer time horizon and a higher risk tolerance at this point.
Yeah, definitely. I think again, when my only liability is myself, obviously my risk tolerance is probably going to be a lot higher. But again, at the same time, that is something that you have to be cautious. And I am very risk on in the markets, but not in the way that most people are. Risk on as in shorting positions, holding contracts and options for things that I think will go down. And again, I think it comes as no surprise that a lot of my options that I've been really getting into in the past month or so have been into things that are extremely low likelihood but high reward, right? And I think that's because a lot of people in the past few months have kind of underestimated time horizon for how fast markets can turn, and also how fast there can be an absolute credit crunch to the point where it's harder to get money. There's liquidity, very little liquidity in the market, and the only way to get liquidity out of the market is to be selling, right? So that's kind of been my entire view on how to pretty much go about the market. And yeah, I thought the market was going to crash back in March, and we said that it was like one of the first episodes we did on Money Never Sleeps. But again, money came in out of nowhere. I think that we're starting to see finally. It kind of showed that the stimulus allowed so much money to be in the market that it kind of prolonged things, I think, longer than necessary. And then obviously the bank term funding program. So I think now we're at a point where there is less liquidity. Money's kind of dried out. We saw the market shoot up. I think people have sold off fairly good amounts since the top of the market, this year. So that's just kind of given me more of a idea that there is going to be continued selling. So yes, I'm going to buy puts, probably longer term horizon, 6 to 8 months, maybe even a year, just to cover my ass. Maybe a few smaller contracts just that are high risk. Like you guys know about my Chipotle one. I bought like 2 contracts. I was the only person that bought them. But, now we're starting to see value come into some of those contracts, which is wild. But that's pretty much what I'm doing. I think in terms of commodities, I'm still bullish on commodities, which is kind of a weird thing to say because I've seen all-time highs. But I think that there are a few that are still extremely undervalued. Natural gas is still one of them. I'm gonna continue trying to put more into natural gas. The VIX, I think, is great exposure right now, so that's one thing I've been adding in the past few days. You guys know about my Binance short. I'm sticking with that one to the end because some fucking stupid shit, guys. Let's be honest. Let's bring that up real quick. Binance trying to dismiss the SEC case after the judge asked them to provide more documents to prove that they had control of their assets. They're like, no, how about 4 and forget about that. We're gonna just absolutely fucking dismiss this, and you're gonna approve it. What do you expect? Desperate times call for desperate measures, and it's so stupid it just might not work. But yeah, we'll see how that plays out. But that's probably my biggest position right now. I'm not really touching crypto other than that. I'm waiting for the bottom to come out for crypto. But yeah, I think main sectors that I really want to have exposure in are volatility, which is the VIX, I do want to get into some of the military stocks too. I think those are going to be really vital going into next year. And commodities for the time being that are undervalued is going to be huge. And then obviously all my shorts. So kind of where I'm putting my money. It's kind of a lot of things going on. It was a lot simpler maybe about 3 months ago, but now I see that there's a lot of value out there, and it's the main thing, just looking for value, not getting married to too many ideas that, and just hoping things work out, actually having a plan and controlled risk tolerance to where, okay, even if I'm wrong, I'm not wrong big and I'm not going to lose too much, but if I'm right, fucking, that's going to be amazing.
Yeah, absolutely. I think it also comes down to how much time you have and how hands-on you want to be with this, and being comfortable seeing the price of everything. Like, a lot of people, they just can't handle the volatility of seeing their portfolio go up and down if they are, more active in the markets and they're on the riskier side. Like,
Balls of steel.
exactly. But a lot of people don't have balls of steel, and that's okay.
Yeah, for sure.
And we want those people to
Succeed.
still listen and still watch our stuff, because we want to try to put out content and advice, but it's not financial advice, for as many
It's true.
different types of market participants as possible, whether it's very active, quite passive, however you want to classify yourself. We just want to try to provide as much even keeled, unbiased information as we possibly can. So that would kind of be my approach. Is, I have a lot of friends who are my age, in a similar spot. They have jobs that do not allow them to stay as in tune with the market as I can, and I do. And in their situation, it's very different. It's, there's nothing wrong with money market funds. There's nothing wrong with some mutual funds or ETFs. I would say don't try not to. I get that you want to buy and hold some certain things for a long amount of time. I think that is a mistake, though. I think you need to be, if you can be a little bit more involved. I would say for a lot of people, if they can commit, if you can commit 30 to 60 minutes a week to stay up to date with what's going on in the markets and to managing your portfolio, I feel like that's an okay amount of time that shouldn't weigh too much on you, but allows you to be, more up to date with what's happening. Because if you ride every roller coaster and you're not taking profits at a certain point, and you're not taking advantage of the big dips at certain times, yeah, you may have peace of mind, but you're also minimizing how much money you can really make here. So I don't think anyone in particular should be day trading. That's not what I'm saying. But being in tune with what's happening, knowing what to look for, knowing when some times are to take profit and other times are to deploy capital, even if it's not right at the bottom. Like, if we're talking about this like a roller coaster, there's nothing wrong with selling just on the way up to the top, and nothing wrong with buying just before you get to the bottom. Okay. So that is what I would say is, like, if it's, a monthly, like, if you're not reassessing your portfolio on a at least monthly basis, whether you're managing it by yourself or with a financial advisor, I think you're doing yourself a bit of a disservice there. So just something to keep in mind for those who watch our stuff, manage their money, but don't want to be overly involved in it. And like day trading is, like, be aware of what's going on and try to make a few more moves than you may normally hear from people who are like, yeah, just sit on it. Time in the market is better than timing in the market, blah, blah, blah. Like, that old adage, it's fine, but I think that applied more to, years past, when there wasn't as much information out there for you, and we didn't have the ability to, have more insights into what is going on in the markets, is what I would say.
Absolutely. And it was also at a time when you had someone fucking, managing your portfolio for you, right? Now you have absolutely all the control in the world to buy and sell whenever you want. Just might not be at the levels you want. But yeah, I couldn't agree more. That's a great way to put it.
Also came at a time when you had so much buying power, and
It's true.
people could buy a house for, their cost of living for shelter wasn't 40% of their take home pay, kind of a situation. So some of these sayings that people like to cling on to, you got to take into account the fact that those were initially, that was good advice at a different time. And in this day and age, you need to be looking for edges, right? Like, Social Security, that shit's running out. You got to be planning for your own retirement.
Yeah.
Like you can't, Social Security is going to be gone well before I'm retired. So I can't be planning on that. I gotta, be proactive there. And I think that's to be said for any sort of account that, investment account you have is like, no one's going to take care of it for you. You got to take care of that shit. You got to make the right decisions for yourself. Don't view that as an intimidating thing. View that as a challenge and the opportunity to outperform a lot of people who are just going to kind of sit there and not really worry about it.
Yeah. Last thing I'll say is just be a cold-blooded motherfucker when it comes to some of these assets, right? It's I personally, you see a lot of people just in crypto itself that are like, "Oh, I love the tech. I'm excited. This is the future." It can be, but you could also just make it as a tool to, obviously progress yourself financially. That's how I see it. I like crypto. I like trading it, but I don't necessarily. If I go, 20 years without buying Bitcoin, I'm fucking fine. You know what I mean? It's about growing your wealth. It's not necessarily about getting married to these assets and, like they say, hodl and all this shit. Uh, Obviously, do whatever strategy works for you. For me, though, personally, it's I want to make money. I don't want to just be holding assets that go up and down all the time. Taking profit for me is going to be the most important thing.
All right. I think that is a good place for us to wrap it up today. Thank you, everybody, for watching. House, Chris, anyone else out there, we really appreciate it. It means a lot to us. We love doing this show. We may not have the biggest audience, but we have the best audience. So thank you guys, as always. We'll be back Monday to get ready for a good week in the market. It's going to be a great time. The last week, maybe, of getting financial reports for a little bit. Thank you, everyone. Hit those buttons down below if you've not yet. Like, subscribe, comment, share us out on social media. All of that great stuff is appreciated. We will see you on Monday. Have a great weekend. Have some fun. Stay safe in the markets, and we'll see you next time.
Take care, everyone.